Hey, Mr. Ben.
Good afternoon, afternoon for you.
Well, it's all right. So how you been? How's everything going?
Not too bad. Uh, yeah,
Making
done better, but okay. Market wise,
okay.
I'm not doing
It's
quite as
been
well as I was a few weeks ago, but I'm still
uh,
here. It's okay.
okay. Well, as long as you're in the steady state, I guess.
Mhm.
Yeah, it's where it gets frustrating is when you start revenge trading and things like that.
So
So
I
it
did.
sounds
I was able to avoid that, or I don't know, chasing in a sense. It just seems like chaos
yeah,
to be honest. And I know I'm looking at levered instruments like TQQQ or SPXL or whatnot, but even the straight underlying indices being up or down, whole digit percentages every other day, like
yeah,
it seems untradeable, to be honest. Like I'm more in cash, just straight cash now than I think I've been in as long as I
yeah.
can remember. Um, yeah, it just seems insane.
Well, that's okay. I mean, I've actually been having some decent traction with some of the just some of
Mhm.
the regular indexes lately. So that's been nice.
Yeah,
It just kind of has that like wave four kind of feel.
right.
So like hopefully I can make sense out of this here. Is there anything you want me to cover specifically? I was just going to kind of cover like
Not
whatever might
really.
be.
No, and honestly, like if it's just me and you want to like claim some of your life back, we don't really have to do like an hour of this.
Well, that's okay.
I
Yeah.
don't need like a private tutorial and your thoughts on the market for an hour. It's
Well,
totally
that's okay.
okay if no one else joins and you just kind of want to do a briefer overview.
Sure.
That's
Yeah, that's
totally
fine.
fine.
Yeah, it just depends. Sometimes people,
Yeah.
I know it's kind of around dinner time, East Coast, Central Time too. So I know a lot of people also watch this in like an afternoon or
Oh,
morning, something
right,
like that.
right, right, right,
So,
right. Okay, that's true.
all right, well, we can get rolling. And hey, Mr. John. All right,
Oh, there we go.
cool.
Okay. Hey.
Um, all right, so let's get moving here. What I'd like to do is I'd like to kind of cover uh, so basically like the bullish and the bearish projections here. Uh, One second, I'm just writing this down. So then once I cover those, I'll probably just use Nasdaq as like a proxy, and I'll also show the S&P. But let me just try to kind of cover this here. I'll also take a look at some metals, but for the most part, I think what I'd like to do is really just show you guys kind of what I'm thinking here. So let me kind of take all this crap out of here and, oops, give you guys the logic behind it. So pretty much, I think what's going on here is we've had this monster run, of course, and I think hold on one second, let me take out some of these levels, blah blah, blah, clean it up. Um, so I think we've had this like larger wave four here on the way up. So if I back it up, and I also like to do just a little recap because sometimes people, they have actual lives unlike me, and they go do stuff, and they forget about it. So um, I just kind of wanted to highlight here. So basically, over this last, ever since April, we've got this five wave up sort of series, and there is a case to be made here about this fifth wave, that it's possible it's not done, but I'm starting to think that it's done, considering the volume of the selling that we've been seeing. Um, so assuming that this last little piece here is the fifth wave of five, you could make the argument here that started here, and then we've got ourselves a nice sort of five wave up extension, or not extension, sorry. So put some contrast here. Again, I'm just doing some recaps. Ben, I know you were here last week, so um, and John, I think you may have been as well. Um, okay, so I think kind of what's going on here is that like I can make out five waves here with this wave three. It's a little bit more difficult here with this last little leg, but I still can pick it out. If you're at a high enough sort of time frame here, where you get this sort of weird chop up at the end. So that's kind of why I think we're done with this five wave. Now I know Alex is very bullish on everything, but I think this is I think this might be kind of like what these guys are missing. So once the 5-wave ends, there are little things, little clues that can kind of cue you in here to what's really like the next move. And if you look at it at the higher level, this is where I think that you'll have I think you'll have like a lot of insight to this. So technically speaking, I should have a podcast and call it Technically Speaking. I think that's like the appropriate name.
That's really good. Yeah.
Right. Man, what a nerd. So technically, if you breach the last prior wave 4 low at the higher degree, so what I mean by higher degree is this whole last little 5 wave here, because we still don't really know what this is yet. I mean, I have an idea, but I still don't want to make any assumptions yet until we have confirmation. So the long story short here is that once you get a breach of the last like wave 4 level, then typically that starts the corrective process. So you could make the argument, just from a pure academic standpoint, that you'll have these 5. Like the start of an ABC. So let me get this out of here, clean it up a little bit. So really, it's just that breach right here of this last wave 4 low that we had. Even though it was very brief and it got bought up right away, still doesn't matter. 95% of the shares are traded by algorithms, and that is that is a big signal to me. So typically when you have pullbacks, you'll get like a huge iceberg limit buy order or something like that at a spot like this, right around this like 24,180 level. And you can get a spring from that, and which we did see. But considering how the bulls are, it's almost like they're just buying no matter what. I think that's a mistake. And the reason I think it's a mistake is because I'm assuming we have started this corrective process only because I can't really pick out any 5 waves on top of this. Now, if I scale it back here, there is a wave count scenario that you can make, where you could do this like 1, 2, and then this is 3, and then this is all the way down 4, and then you have a higher high. I'm not really getting that right now, considering how we've also had 2 large rejections of the top. So now this is now a double top. It was looking kind of like a head and shoulders last week when we were talking about this, where it was like, all right, this is kind of but it really wasn't symmetrical. And I stress symmetry because on a higher time frame, like the hour charts or the daily, typically you'll get these. Typically you get things that it just maps really well. Once you start to go down time frames like 15 minutes, 5 minutes, a minute, then things get a little bit more, kind of convoluted. But I guess that's kind of my logic behind why I think right now we're at this sort of point. Now, it's also coming into earnings season, so before I just assume everything is all bear, I don't want to be accused of that. So let's entertain the bull scenario first. There is a channel line like this where you could make the argument that we can have something along the lines of like this, where you could have this sort of extension, and this would be like you could call it like an irregular. And what I mean by irregular, and again, for people that are watching this, typically the easiest way you can determine this, whether we're in a corrective structure that's called a flat or an irregular flat, is you can draw a box around the price action. So anytime that you violate the last high within about 5%, then that's still considered like a flat correction. So a flat correction looks something like this, just in a normal sort of, like if you have a book, they'll show you it's something like this, and you can kind of see that it's still kind of within the bounds, and that is a typical like wave 4 sort of flat correction. So every time I look at these sort of patterns, this is the first thing that I always consider. So if I'm looking at this, normally I would have said, okay, here we go, like right around here. Okay, then we're gonna get a continuation. Well, no, sometimes it doesn't really happen like that. Sometimes you get channels. Sometimes you get big rallies, you know, especially since we're coming off such a super heated, you know, bullish, you know, bullish extravaganza. I mean, it's climbed 55% since April. And it's, I mean, holy hell. So, so if you're looking at this like bullish scenario, it's possible. Now the only thing that changes in this scenario, and it's a little messy. I'll give you that. It's pretty sloppy, but typically this is like your ABC, and you know, it's not easy to pick out, especially when you have a very large sort of sell-off. But there is, you know, once I go into the lower time frames, you do have a tiny little like B wave in there, so it counts. I don't like it, but it counts. And I guess you know, a lot of the stuff is kind of subjective, so you have to be careful not to like, you know, put all your eggs in this basket and bet the farm and go short, because you could have something like this. So this last little rally here, this last little sea leg, it went a lot farther than I thought it would, because I also kind of thought too that we had this like ABC already kind of buttoned up with something like this, because if you zoom in a little bit, you could see that, you know, there's some waves in there. There's like an ABC. You know, you can kind of pick out a series of two up here. So, I mean, that's kind of my job, is to kind of pick through this crap and give you guys the cliff notes, right? So anyways, like back to the bullish projection. So, what I do think we might see here, it's possible that we could see like this. Let's say it's like maybe a slight little higher high tomorrow morning or something like that, if they keep it pinned, and then maybe like a revisit down here, and you know, gets bought up at this huge volume shelf that we have down at this 24,605 level, and then you know, we could see this rocket like this. Now, so I guess you're probably thinking, okay, what does that mean for this pattern over here? Well, all that means is that you just get something like this, and it's called an irregular. So typically an irregular is like a 1.328 extension of the A leg. So if I just, you know, draw this here, okay, let me put this in more context for you. So typically when you measure these things, you get something like this. And it typically will reverse right around this like 1.382. And that is like the upper extreme maximum. So some people ask me sometimes, like, you know, how do we know if that's it? Or like, where do I know where to release my hedges? That is the most common question that I get. And my answer to this is, if it does, like if it exceeds this, you know, this A equals C, like 100% sort of move right at the top of this range, then typically what I would do is within 5% of that, I would add a hedge, or like I would add a 50% hedge on breach, because sometimes you can get like a fake out, right? Like you can get a, you know, quick pin bar up and down, and you're trapped. That happens pretty often, especially at tops and stuff, you know, because usually it's like a, you know, you get an all-time high, and then you get a pullback, and an all-time high, then a pullback, and you kind of just repeat the cycle until it drives you nuts. So, you know, Ben, what you were saying before when you first joined is like, you know, it's kind of untradeable. Well, I wouldn't say it's untradeable. It's more of like, it's just a real test of patience with really trying to figure out where this is going to stop, and where, like, it's sort, I think about it like a if-then statement, and it probably resonates with you as a, you know, programmer dude, you know. So like, or, you know, a spreadsheet, whatever. I think about it as, if we have a breach of, let's say, level X, then we should expect to see, you know, an outcome of Y, that kind of thing. So the way I think about it is like, if we see a breach of, you know, this level, then most likely you're going to see some sort of, you know, continuation. So it's like, if it doesn't get breached like today, then we can check one more box and say, okay, it's highly likely that this is a flat sort of correction, or a flat sort of thing. So instead of doing this crazy, you know, another stab higher, that's kind of why I think we've already seen this like 5-wave up. It's a little sloppy, but it still doesn't break the rules. And again, you know, algorithms trade all this stuff, so it's important to understand that, you know, like highs and lows and patterns and stuff, that's all programmed in there, especially with these guys who have infinite money. So you know, so taking that into account, with these wave patterns, if you understand like some of the nuances between them and the different types of waves and styles, then I think you can trade these sort of like wave fours a lot more successfully. So I guess the last thing I'll say about it is, again, it's like if you have a breach, okay, well then you have to measure how much further is it going to go. So you always pick like your lowest point and then your what looks like after a bunch of chop. Usually you can pick it out where it's like most likely you will have an ABC sort of move from the bottom no matter what. So if it's a wave 2 or if it's a wave 4, like for example, sorry, I know it's getting a little cluttered, but hopefully this makes sense. Stop me if it doesn't. Like you could see like a wave 1, wave 2, and then a wave 3, that kind of thing, and then it just keeps going to space. But typically it always starts with an ABC. So like the if then I was talking about was if it exceeds the A equals C, right? So then you measure higher. So in this case, I'll kind of expand the pattern a little bit. So what I'm saying about this, let me clear this out so it makes it a little easier. So if you have this, this ABC like this, so what I was expecting was, okay, maybe a quicker little high here, because you can kind of see that this might have been like a 5-wave series. But the good news is that it rejected. So, well, I mean, depending on who you ask, that's good news or not. But in my opinion here, once this level is breached, that's like your hedge level. So once it if it just makes a little bit more of a high beyond this A equals C level, and if it's properly measured, then most likely it's going to hit this next level, and that would qualify as like an irregular. So what I would do is I would set a hedge, a couple points. Like once it's breached, then what I would do is set a hedge like beyond that last little high. So if you see this little red thing here I drew. So once you see this little stab up, that's like testing to see if they can push it higher or not. And you can also look at volume too and some of the price action. But for somebody who, you're not sitting in front of the computer all day, it's really hard to figure that out. So I guess the easiest way to do it is once you see this little breach of the line, then once it's once it kind of like back tests, so you might see something like this where it heads up and then kind of heads back a little bit. I would set my hedge like right there, so just above that new little high. And then once eventually it kind of goes up here, well, then you can set a like a break even stop loss or something like that. So that'll help you if you have open shorts. And it's like the flip side if you have open longs. So, I won't, and that's probably a lot of talk for people following, after the fact. But I guess the main takeaway here is that if these patterns don't typically play out, then you try to go to the next one. So as far as I'm concerned, I think we already saw this this ABC sort of top. It was kind of truncated a little bit. Also, just because this long-term level. I'll just pull this out here 1 second. I covered this last week too, where this really long-term gold bar that you see up here. Oh, God, there's tons of crap in the way. I'm sorry, guys. Well, here. So like right here, right at this like 25,200 level, that's where that big gold bar was. That is typically a wave 3 extension limit. If it continues to go up, then it almost like doubles reliably. So I guess what I can say about it is until this high is breached with strength, to me it's over, or like this wave 3 is over, or wave 5, whatever it is. So for right now, we should have some pullback and a little bit of a break here from the constant all-time highs. But it's really up to the bears. It's their game to lose. So kind of what I think is going to happen here is you'll see this this sort of move play out, where it might not actually go much further than where it already did. So just to kind of highlight this with some contrast, again, kind of at the beginning of the show here, you just draw a little box of where the price has been and where it's bounced off of, and this is your tradable range. So another good way to put it is this script here that I have. It's pretty much like a risk indicator almost, where it's like your price action is mapped to the RSI. So once you get like, a little bit lofty here where it looks like it's overbought, it kind of flashes red, that kind of thing. So really pay attention to like your RSI indicator, especially for swing trades. And this is only at the hour level. So if you put it up to the 2-hour level, that kind of thing, you can still see that there's there's some high levels with the RSI, and you can play with your colors and stuff like that. But I've found this actually very, very helpful. And this, I know this is the first time I'm actually showing you guys this, but this chart has been incredibly helpful for just visually identifying where we might have bottoms and tops and stuff. But it's also important to note that during the day, right? So let's say you got your 2-hour window. If you're sitting here and you're watching every moment, that doesn't look like you might get some support. But you can also see here that today, we had some oversold, that was going on here today. But now, as you can kind of see, we're kind of getting a little bit more in the green area here, which is right in the middle of the zone. So let's say you wanted to go long, or short or whatever, you'll still probably be able to get out of it. And that's kind of like the takeaway. So if you look at the RSI, and you also kind of look at like your volume profile here, you can see that like this level at the top, this is a huge volume sell shelf. I honestly don't think that bulls are going to get past this anymore. I think that enough people have distributed enough shares and done all the stuff and things where now I think that big players have taken large short positions, and now they're going to defend that. And I think we just saw that this morning. So kind of going back here to the main chart. What I think we could see is, and once I'll take all this out of here, but what I think we could see, it doesn't necessarily, like this ABC, it doesn't necessarily have to be this 5-wave down. You could have like a more complex sort of corrective structure, and I don't want to bore you guys to death with that. So what we're going to do is we'll just draw a little fib here, and what I think you'll see tonight is probably the next hour and a half here, you'll see something like this where it tags this 50% retracement level, kind of bounces around like this for a while, and then you'll probably see something more like this where you'll see an ABC, and that might be tomorrow, it might be Friday, not really sure, but that's at least like the easiest thing that kind of pops out in my brain today. And you actually might see like a breach of this lower trend line, which we've been waiting for a while. If you do, highly likely you'll see it sell down, test this 50 here, and then you'll see it kind of bounce back up and see this big volume shelf. That's where you want to look for a rejection. So I'm not saying there's no dips to buy. There's absolutely some dips to buy. It's just patience is going to win in this sort of thing, because I think that we're probably in for a little bit deeper of a cut than what people expect. And even if it doesn't go past the C level, I think the next rally from there would be short and sweet, but fast. And then once it's over, it's over. Yeah. So I think that the clock's kind of running out on the year so far, and this will be the 3rd year in a row for gains in the market for greater than 20%, which is statistically like almost unheard of. Obviously, it's a bubble; it's the biggest bubble of all time, that kind of thing. It could go a lot higher, sure, but I think for now, bulls need a break. There's lots of buyer exhaustion, except for the people who have infinite money. So the people that are trying to game the market, push up price, whatever, they never get exhausted because it's all just robots. So I guess kind of how to play this is in the next day or so, if that short projection does not materialize, and let's say you have some longs that are trapped up higher, there is a significant possibility that you could see something like this tomorrow morning, where you see like this ABC up higher, and then you get just another little reach higher yet before you get this. This is, I guess the bullish scenario. So you get a little bit more of a reach higher before you get this sort of correction back down to make a lower low. Does that make sense? So this is kind of like your bullish projection, and And if if it reaches higher than that, which I doubt, at least for this sort of pattern here, then it should just continue to make like a triangle, kind of like this, where so basically, like, here you go. This is, I think, probably what we'll see bouncing around, but I don't think that going big long is going to be a good decision here until you have some sort of resolution to the downside. If you think about it, we didn't really have much of a catalyst today, other than I guess earnings yesterday, but yeah, I guess Netflix earnings weren't that good, but Teslas were okay, but we have some more earnings next week and stuff for the big players. So I think that we'll probably still consolidate around this range, but typically when you have earnings like this, you'll see a lot of this whipsaw price action. But pay attention to where the charts are at, because if it looks like we're at a B wave, like we are right now, more than likely the reaction in the morning will be like a sell, or let's just say likely it'll be a sell. I've always been surprised before where you wake up in the morning and the market's up 3%, and you're like, what the hell? So, which has happened, frequently. But still, like in this sort of consolidation pattern, like we kind of walk through the thought process to lead up to it, and where I think it kind of might go here, and also with being able to read some of this volume here, where if you guys kind of notice, like bulls just there's strong selling all day today until the last hour, really hour and a half, where the bulls just took it and there was almost like no resistance. That is sort of by design. So it's like bears hit their target, and they've got a trading plan for the week. Let's say you're unloading billions of dollars worth of shares, you've got a plan. And if the plan doesn't work, you've got a contingency. So we got a lot of smart people figuring that out. But in my opinion, you'll get some sort of continuation here, because there really wasn't anything that was like good news. Even if you have more of a rally tomorrow, so if you see this sort of bullish projection like this tomorrow, then we have what do we have on Friday? It's something. Oh yeah, we got inflation stuff. So I mean the yield is set to rise with its chart, or the 10-year. So that's kind of what I was thinking with, like we'll get a bad inflation print or something and send the market down. So just, I guess, expect more chop, I guess you could say. The one thing that I tend to look at during the day is, if I'm trying to figure out like who's in charge, is I'm always looking at these like top wicks. We can see it a lot better on like the 1 minute, where sorry, jumping all around here, but you can kind of see like all day today, there's just nothing but shutdown, anything bull related. Even if you popped up a little bit here, that's just another wave, and on the way down here. But that's kind of like I try to update some charts and stuff throughout the day. But you can see it's just a very, very heavy volume day, where bulls are trying to buy the dips. You can obviously see that here, and then they're getting shut down. And I think the bulls had a very, very tough day today. So if you weren't patient, you got crushed. So long story short here, I think that what we're looking at is I think it's a bear's game to lose. I think that there's selling going on right now. There's been distribution since July, or really since June, and these guys got to be running out of shares to sell. Okay, so that's that. That kind of doubles for like the S&P and any of these other guys. Like, all ships rise and fall at the tide. So you're going to get one starts to sell off a lot, you're going to get the same with like the Dow and small caps and stuff. And small caps kind of follow their own beat anyways. So any questions about that, or does it sound like I'm stupid or something? Please say something. Nobody tells you if you're stupid or if it sounds stupid. Okay. So with that being said, let me pull up some of these other things here. Let me just go over. I know some guys or some people have some questions about MSTR. Yeah, so let's do it in reverse here. Let's finish up the equity charts. So actually let's start with Bitcoin here. Bitcoin's the one. So Bitcoin, I think is has been in this. Oh yeah, you know, the irregular I was talking about. This is actually a really good example of it. So you saw this ABC down. Just, you know, for people tracking along at home, you saw this ABC down. Jeez, they're doing construction across the street, so just got crap scared out of me. So you can see this ABC up too. So this is actually a really good example of this irregular sort of correction. And then what we might see here, you know, you always want to look for retracements of 0.618. So for sorry, for like the backside of this sort of correction type. For right now, though, I'm not really seeing it. I'm just seeing a bunch of ABCs again. And I think, you know, that's I think about it like an ABC is like a less serious correction. A 5-wave correction down, that's a more serious one. You'll get a lot more violent reaction. But anyway, so like Bitcoin looks like it's heading down. It's kind of, you know, doing this consolidation thing around this 200-day moving average. You're going to start to see the 50 kind of bend down a little bit, especially the longer it spends below the 200 moving day average. And I think that you know, you can see a lot of volume here. I think a lot of people are taking profits. You know, the Larry Finks and all the people here for crypto, because, you know, Bitcoin's still the most well known. You know, other than like Ether, like unless you're like truly invested in the actual like crypto market. But I guess, you know, long story short with this is that I think without any major catalyst or without any major buy, sure, you could see some sort of, you know, surprise where you could get a complete buy up like that. And then, you know, it just shoots right back up to this 0.618. But then I think that's what sets up a larger sort of move down. So you get these sort of things. So I think about it like, you know, action, reaction, right? The larger the move, the bigger the counter move. But the only question is timing. So with that being said, we head on over to MSTR here. That's where I think, you know, if you know, Bitcoin heads down another, let's see, what is this? Another, you know, 8 or 9%. I mean, that's not unheard of. It'll still keep you right around that 200 or that 100,000 mark. And I mean, you know, hit that, you know, a long time ago. It's been up there kind of consolidating ever since. So if you see that, you might actually see this, you might actually see MSTR kind of melt down a little bit. I think there's a good case here for an extension. Here, you know what, let me measure this. There's a good case for, you know, like we got this support before. You could see a bit of a melter here. I don't want to, you know, I don't want to say it's going to happen because that would be pretty devastating down to, you know, make a new low here down by this 210. I don't think that's really going to happen at this point. I mean, I've been surprised before, but there's a lot of selling. You know, I think yeah, MSTR's got this earnings coming up on the 30th, and I think what you'll see is that they've kind of cooked the books here. They'll probably offload some coin or do something in order to surprise revenue to the upside again. Considering how they've had these just dismal earnings reports, this is all kind of smoke and mirrors. I think this is really not a profitable company. And I think Don was talking about it last week, where they're going to start to what were they going to do, man? Like offer like leverage products or something like that on top. Like they were going to loan out their Bitcoin or something, or use it to leverage something else. I don't know. Whatever it was, sounded ridiculous. But anyways, yeah. I mean, they got some sort of scheme going on where they're going to try to use what they have, you know, the assets that they have in order to tokenize or something, or whatever it is. They're going to try to make money on other people's money somehow, some way. But the big signal here that we can't really ignore is this crossover from the 50 over the 200. The turquoise is the 200, the 50 is the purple. And once you get that crossover, it's called the death cross. And that typically means that your price is going to stay below the 50-day moving average until it, you know, consolidates, gathers strength. So I think it's going to be a, you know, probably a dark winter for MSTR here. But that doesn't mean that you can't see rallies. Okay, so you could see something like, you know, heads down here. You know, Bitcoin gets a little bit of support, and then MSTR accumulates for a couple days or whatever. You know, they have their earnings, and then it, you know, shoots back up, and then, you know, runs into some more resistance, and, You could probably see this 50 kind of flatten out a little bit, but more than likely it's going to stay below that like 320 price level. But it all just depends. So that's kind of what I think about that right now. I'm happy to dive into that a little bit more if you guys have questions. So Nvidia here, can you see the difference? So like when you look at this at the daily view, you can see a very clear 5-wave sort of structure. Very, very clear. And even if this is still like a wave 4 here, which is what it kind of looks like, or maybe an irregular, I still think you can pick out 5 waves here as like a final 5th wave. And we've already breached this other high twice, well, 3 times already. So in my opinion, it's like a correction's knocking on the door for Nvidia, and I think that it's more than fair. that it's overdue. I still think it's more like 15 or 16% of US GDP or something like that. So it's ridiculous. All right, Tesla. So this is the big one. They had some troubles here with earnings, but I think that they're explaining that away with like unit sales or something like that. But again, I mean, now you guys are starting to see things slow down a little bit, like economically. Yeah, I mean, Walmart just raised food prices the other day. I saw that. People are like the price elasticity that I was talking about with Netflix and their chart yesterday. In the main channel, serious about that, where people have a tolerance only for so much of like price increases and just getting manhandled by these companies into paying more, and you have no choice. Well, you do have a choice. You can cancel, and I think a lot of people choose to cancel. Another thing too, by the way, is there is a lesser known pattern that's called this. There's a lesser known pattern called the diamond top, and that's where you see these. They're like reversal patterns. So we'll see if that actually plays out. But something else I've been noticing here is well, let me show you the other one. I want to say, oh no, sorry, oh never mind. I don't want to go into that. Okay, let's talk about stocks. So stocks here, getting a little bit of a reprieve here from the bottom, but I think this is sort of like a parallel to what's going to happen in the Nasdaq. I think you're going to see maybe something like this a little bit, and then maybe like a continuation, because some steam needs to be blown off of stocks. I mean, it's been ridiculous for quite some time. So I think that pretty much does it for equities. Let me actually pull up the quantum stocks. They got destroyed today, but that's kind of good because I want to go buy some. So let's take a look at. Yeah, these guys got pummeled. Okay, so real quick here, QBTS. So D-Wave here, they got totally hammered. So let's just do a quick little drawing here. Yeah, so it already kind of breached this this 0.618 level. And to be honest, it's actually lower than when we sold out before. So that's great. Even though we missed this whole crazy rally up, like how do you know when to take profits? That's when you get a blow off top like that, it's really difficult. So take the gift that you've been given and buy back in, when it starts to hit support. So what I'm looking at is like the 50-day moving average here. Some of these other guys, like QUBT, they've already got these. Sorry, actually, I should have updated these charts earlier today. Apologies. But you can see these pretty clear like pullback levels and stuff. They've got some support down here, but this isn't over yet for the quantums. I do think that like you're gonna get 12.6 again. So this would be a great level to buy. It would also be a really strong bounce at that 200-day moving average. That's their turquoise line. So I think that QUBT's come up for a good buy. In fact, I'm going to do a little alert there. And then going back to D-Wave, if all these other stocks are getting crushed like that, more than likely you'll see this retest of this breakout zone. So I have an alert here. Excuse me. But you might actually see this 2140 again, for this 0.786 retracement. Let's look at RGTI. I saw Alex was talking about some puts and stuff with RGTI. I don't really know if there's that much juice left to squeeze out of the puts for that. I think that you will get like 32, but if we're already closed at 35, I mean, you're talking kind of a peanuts move right now. I actually kind of think it might head down a little bit lower, maybe like this 28 level. That kind of aligns here with the 50 and this 1.236 extension. It did have a rocket off, off to the moon here. And I think that you will find some support. You probably won't see a lot of consolidation, and you'll probably see like a pretty strong retracement, probably back up to like the 45 level. So you could buy the stock, you could sell some puts, you could do whatever you want. But I still think that, again, like these are just not done selling off yet. So IonQ, this is the one that I want to pick up a lot more of. I think that it sold right through the 50 today, but right at this 53.91 level, like you don't want to see it kind of knife through that. Like you saw a lot more sell volume today than you did buy volume, even though there was that little buy up. Like that's the same thing with the Nasdaq. Bears just shut it off and they're letting the bulls buy it up, just so they can sell higher. Probably what you'll see here is a bounce off this like 57 level, this 50, and then head back down here. But right around that like 40, 48, like 48 to 46 price zone, that's where I'm gonna look to pick up some more shares with that. I actually think the technology that IonQ has is probably better than everybody else. RGTI is okay, but I think IonQ's got their act together a little bit more, and I think that's definitely going to be the quantum leader here. You can see it reflected in the price action for sure. But the two leaders, in my opinion, are IonQ and RGTI. They've got government backing. I mean, so does D-Wave, and so does QUBT. But like, it's the scale of the backing. D-Wave. These guys have been providing like solutions for like FedEx and stuff like that, or like UPS. Pretty much what D-Wave does is like it produces an answer of like the lowest energy needed to do something. So it's huge for logistics. So something like Amazon would highly likely use somebody like D-Wave, because like they're just the style of engineering that they have with their quantum computers. Like FedEx, like it only left turns, that kind of thing, whatever. But yeah, so long story short here is you've got some nice pullbacks here that are definitely viable dips for the quantums. Rocket Lab, I think, is going to be a good pickup as well. I still think look, I mean, I haven't even adjusted the chart, but this actually looks like a wave 3 maximum. So something you might see maybe like that. I think I'm going to sneeze. I'm not sure. False alarm. Okay. All right. So let's go back to regular scheduled programming. Let's look at gold. Let's do the yield in metals and commodities, and I think that's about it. So I updated the chart here with the yield. I think you've got this pretty key target level here of like this, 3.887. Once you get that breach, then I think the next level down is like this 3.685. I don't think we might get there. I'm not sure. Like I was saying, symmetry is important. So on the long-term scale, so I think that you'll see a little bit of pattern expansion to the downside. And I think that it'll kind of have, cause me to like rework these charts a little bit. But if we get a bad CPI print, you're going to get a bounce right off the floor. So I think probably tomorrow you might see like, continuation of this fifth wave down. And if you see some consolidation there, then you'll probably see a jump up after that. All right, gold is nuts. Let's just say gold is the big hedge against everything now, as opposed to like bonds, because bonds, everybody knows they don't pay enough interest, or they're stepping on the yield through interest rate controls or whatever, because the government's refinancing a ton of debt. So in my opinion, like I don't think there's like this sinister plan. Like it's really hard to keep that under wraps. Like conspiracies. Like it's just really difficult to, if you have more than a couple people in on it, it's like everybody wants to tell all their friends about this cool scheme they're on, right? Or they're in. So what I think is happening is I think that the administration has some sort of like, hey, we'll give you tips if we're going to do something crazy, so you guys can position accordingly. If you guys stop selling off all the bonds, so we can keep the yields low, so we can refinance our debt, keep things calm for a little bit, and then we will reward you with, this favorable treatment or whatever. I mean, you've already seen the tweets and stuff. I mean, and you're talking at like the exact right point in the chart. Like, come on, guys, like, So I mean, these guys are smart. They can pretty much do what they want. But I think that there's a lot more like backroom deals and stuff than we're probably aware of. And not saying that that's actually I'm not saying that that's actually a thing that's happening. It's just what I think, like personally. So I don't have any data to back it up, but it's like once you've seen a couple of these moves happen at like these chart levels that are just too convenient to ignore. Like, hey, it's a good time to buy, or like, okay. So now we know it's a thing. So I think now with gold, what you'll see, and the yield is like, you'll still see the yield kind of being pushed down a little bit through like rate controls. And you won't see a lot of bonds being bought up, but I think where the money's going, the flows are going to gold and silver and metals. And that's where, and also eventually commodities. I think commodities have still been bid up for a while, but if you just take a look at like gold and silver charts in general, like they're all shooting up to the moon. But this is where I think we're seeing the blow off top, not equities. I think that's the biggest thing, because I think we've already had a blow off top in equities. Like, you're living through it right now. We just haven't had a 12% sell-off day where people jump out their windows. So yes, we'll see. I think this time is a little bit more controlled. There's a lot more digital controls in place. Like, we're lots of market sells are coming in. Okay, inject liquidity in the markets and stop it from selling, that kind of thing. I mean, the Fed purchases assets sell. That wasn't a thing in the 80s. You know what I mean. Okay, so so oil here is really taking off, and that's good because I got a pretty decent position size. I kind of thought that the shorts were wearing thin. I kind of closed out right around here. I didn't really think it was gonna sell down a little bit more, but hey, whatever. So I take a little bit of a bath on the position, but doesn't really bother me much because I know that eventually, oil's going to head back up here, at least above 62 again. American producers need prices higher than 62 in order to turn profits on barrels. So I think, again, kind of this collusion thing where it's like, I think that like the oil supply in Russia and like the gas supply, they're bombing it. So now they have to import oil and gas from their neighbors and stuff, where they used to be a huge net producer. So again, that's just turning the screws to have them negotiate a little bit more with the Ukraine stuff. But so I think that's why seasonally, like, gas had its worst September like ever, when seasonally it shouldn't have. Even though we do have a tighter gas supply. So if you look at the supply stocks and stuff like that, you'll see that there's actually a decline in storage. So coming up on the winter, if we have a bad winter, gas prices will shoot to the moon. So that's why I'm holding on to my boil right now. I feel like you're going to get a compensation for that, in the future. So, and also to oil. I mean, you think it's had a, in 2 days or 1 day, it's almost up, almost 6.5%. That's huge. So I'm gonna go get gas tonight. Okay, so that's pretty much it. Any questions, comments, concerns? No complaints today. We can save the complaints for tomorrow. Just put them in chat. Okay. Well, if there's no questions, just let me know. Send me something in a DM if you got anything off to the side. If not, then we can wrap up for the day. Okay. All right. Thanks, guys. Appreciate you joining.
Thanks, James.
We'll see you.